Welcome to another episode of the Real Estate Ballers Show. If you're new here, my name is V. Lee. This is the show about sharing real estate knowledge, experience, and real life lessons. Today's guest is Bronson Hill. Bronson will share his multifamily journey with us. We talk about finding the deal, what to look for, and how to raise money to buy them. Hi, Bronson. Happy to have you on the show.
Hey, V, I'm really excited to be here on the Real Estate Ballers show. This is awesome. I'm excited.
Yeah, me too. I've been looking forward to our chat for a long time. So, would you be so kind to give the audience a quick introduction?
Sure. Yeah. I work in multifamily real estate. We have almost 200 million in real estate now. I've raised about $27 million and mostly buying property in the Sun Belt. So from Texas to Florida, we're almost exclusively these days focused on Jacksonville, Florida. But I didn't always do real estate, or I've been doing single family for a long time, but it's been about 4 or 5 years in multifamily. And there came a point where I learned about, how syndication works and, what really the advantages or the long-term advantages of doing bigger deals, that really instead of buying a bunch of single family houses like I was doing, I could buy larger multifamily. And I didn't necessarily have the money, but I found out you could raise the money. And so it took me on a journey of discovery and just learning how to create value for investors and learning how to raise money. So I've actually spoken on the phone on Zoom calls with over 1,300 investors one-on-one. So I had a lot of time just learning, about people's concerns, reducing taxes, having truly passive income. People think they're going to buy houses and become financially free, but it usually doesn't happen until they find a way to become passive in their deals, which is awesome, or at least become more passive. And syndication allows, as a passive investor, people to do that. And then also just to give people, control, it just kind of tied in. I give people control over their time. So those are all things that are passionate to me, but I love talking about real estate. I love sharing my story, and I love helping people to create their own, and how they can leave their job, do real estate full time, or just have enough passive income come in to where they can if they choose to, which is great. Sharing my story, and I love helping people to create their own, and how they can leave their job, do real estate full time, or just have enough passive income come in to where they can if they choose to, which is great.
Well, you mentioned you're doing a deal in Florida. Where are you physically located?
Yeah, so I live in Southern California. So I'm in the Los Angeles area. We own nothing in California. We've got 200 million in assets and nothing in California. So
why is that?
Yeah, there's a friend of mine that says this. He says, live where you want and invest where the numbers make sense. So there's a couple of reasons why. One is that the deals don't make sense here for a number of reasons. The returns are lower. Also, it's very difficult with all of the limited landlord rights. Right now, actually, in the city of Los Angeles, they've extended the eviction moratorium all the way until June of 2023. And so tenants, if they've stopped paying, and actually UCLA did a study in the city of LA and found out that over half of tenants have actually stopped paying rent. So if you own housing in LA, you're just dying right now, right? It's just really tough. You're screwed. Yeah. So you can't do value add, you can't raise them. You can do it. You can't really increase, the rents. So so I live here. I really don't pay much. Yeah, I pay about a 1% total tax rate. So that's one advantage of being a real estate professional and doing multifamily, is you can reduce your taxes potentially to zero. And so I've been able to take advantage of that and invest where the numbers make sense.
So tell us, how did you really get into multifamily? Because you said you were buying single family home. Like, how did you get started?
Yeah. So what I did initially is I've always liked real estate. I had a house for years. I bought it, around 2006 in another state. I went for a job. I moved. I ended up keeping this after a couple of years when I moved back to California. And I just realized, like, kind of reflecting, I was like, man, that was a really good investment just to hold on to that house, right? Because I didn't really have to do anything. It was cash flowing a little bit. And so I started buying single family houses, and then I got to 4 or 5 houses. And I have a cousin who's more of a distant cousin. And I started telling him my plan to buy 30 houses and to retire with passive income, right? And he said, well, he'd been doing multifamily for years. And he said, it sounds like a lot of work. Why don't you do multifamily? And I said, well, I'd love to, but I don't have the money. And he said, well, you can raise the money. And so, again, a lot of times with single family and anybody who's owned even one rental house or even a few, it's the difficulty is it's hard to scale. The cash flow is very minimal, especially these days. A lot of times there's negative cash flow. You actually have to pay for the privilege of owning the house and you don't get cash flow. It takes cash out of your pocket every month. So with multifamily, what I learned is that as I learned about syndication, my cousin really said, hey, go listen to this podcast, go to this event, go to these, just try to learn as much as you can about this. So I did. And I really made a decision. Tony Robbins, I'm a big fan of Tony Robbins. He says, it's in your moments of decision that your destiny is shaped, right? So I made a decision that I was going to go for this, that instead of doing 30 houses, I was going to go into multifamily and I was just going to learn everything I could. And so about 6 months after I had a conversation with my cousin, maybe less than that, I started a meetup in Los Angeles where I partnered with another investor and she had a successful meetup. And I said, hey, what if we do, instead of just a real estate meetup, let's do one just on multifamily and you show up and I'll do all the work. And she said, that sounds like a great idea. So I basically set up this meetup. We've been going for about 4 years now, but at the first meeting, met my first investor. He just randomly came up to me and said, hey, I'd invest in one of your deals. And I was thinking like, wow, I don't even have a deal. So I got together with him and I showed him a sample deal of what a deal would look like. And he said, yeah, I'd invest like 100K into that. So I introduced him to another guy in that same meeting who had a deal. So basically I was able to, find an investor who had, the desire to invest. And I introduced him to a guy who had a deal. And I basically got in the middle of that. And now I got some experience. I got my first experience in raising 100K for one deal as a general partner. So that's kind of how it starts. And then of course there's been, multiple steps beyond that. But the hardest part is to go from 0 to 1, to learn how to do it and actually get your first investor.
So when you got into that deal, for making that connections, did you get any money? Did you get paid for it?
Yeah. So I think I got in the acquisition fee, I got about $1,000. So it wasn't a whole lot, but I got something. And then I probably got paid about maybe $10,000. We sold it after a couple of years. The deal did fine. It did well, but I got paid some money, but it was really for me about the experience. A lot of times you want to do things and get paid right now, get paid right away. Well, the second deal, after I found a partner and I basically approached somebody who was very successful. My second deal, the acquisition fee check alone was $44,000, right? And that was only about maybe 7 or 8 months after my first deal. So, and then I've had acquisition fee checks that have been substantially larger than that. So, I think it's one of those things that when you're looking at it and it's new, everything feels overwhelming. But really what you're learning and what you're going for is not necessarily the money. You're really needing to learn the skills of how to syndicate, how to speak with investors, how to promote your deals, how to connect deals and money, and how to make it, work in a way and communicate with investors in a way that they trust you.
Tell us a little bit more about this acquisition check that you said repeatedly. What is that?
So an acquisition fee. So in large multifamily deals and in syndication deals, so syndication is just a fancy word. It's a legal structure that we use to put a deal together. So instead of buying a house, we syndicate, we'll raise millions of dollars to go buy a big apartment. So between my partners and I, or whoever I'm partnered with, we'll have this opportunity to go do a larger real estate deal. Now, when you close, you typically get paid, it's usually around 10 to 20% of the total amount that you get paid is actually up front, which is nice, right? So you do get kind of a cash infusion, but it's not enough to really, you don't live like a king or anything, but you do get paid, and it is, you'll do a lot of work and all of a sudden you get this big check. So I've had times where I'll work for months and then all of a sudden I'll get like a 80 or 90K wire into my account, right? Which is amazing, right? From the acquisition fee. So the acquisition fee is typically just something that's written into the deal for the partners to really help them to continue to go out and find deals, to continue to operate, because a lot of how we get paid as general partners is it's pretty back end loaded, where you get paid a lot when the property finally sells, which is great. But the challenge is when you're working along the way, you're kind of, I don't want to say you're starving, but you're just really not getting paid super well along the way. So you've got to keep doing more deals, get more acquisition fees, and then grow this long-term wealth. But it is nice when you do get those big checks or those direct deposits. That is very nice.
So if I'm comparing this to the single family side of things, it would be an equivalent to a wholesale fee.
Yeah, it'd be like a wholesale fee. And hopefully, I don't know how big wholesale fees are, but correct. Do you do wholesaling as well, V?
I used to, not too much anymore. We keep almost everything now. That makes sense. And I wish I kept more, but obviously, you gotta sell something to pay the bills
Yeah, absolutely. You
and
do.
travel.
Yeah, yeah. I know we were talking about travel before we started, but no, it's good. But no, I think the idea, of syndication and larger multifamily deals, the nice thing is, when you look at like if somebody's a real estate agent or if they're doing wholesaling, it's a transaction-based business, right? You get paid, that's really how you get paid is by doing the transaction. You did the flip and then it's over, or you flip the house and it's over, or you're a real estate agent and it's over. With these big multifamily deals, we not only get the acquisition fee check, we also get equity in the deal and we share in the profits for the long term. And I think that's how people get wealthy is that they find a way to move over from the transaction side of getting a fee to also going over to the equity side where you get to be really aligned with investor and you get to see a lot of the upside when things go up over a period of time.
So, walk us through the starting out. How do you go about finding these deals? Hey, I love to hear what you guys are doing, what you are using, and what's working for you. So, drop a comment below. Let us hear about it.
It's been interesting. The last 3 or 4 years, we've had a lot of different just environments when it comes to looking for deals. We've had times where deals are kind of like, okay, you can find them. They're here, there, they're everywhere. And then we had, through COVID, things kind of shut down for a little bit. And then they really picked back up. And then they got to be really hot to where it was like we're having sometimes 20, 30 offers going for the same deal. Now it's getting to be, it's become a little more of a buyer's market because rates have been rising. So we're finding some great deals, or even at the closing table, we'll say, hey, we need more of a discount on this deal. And people are giving more of a discount. In general, the best way to find deals, and everybody likes this idea, even a wholesaler especially, is like, I want to find an off-market deal, right? I want to find somebody who it's not going out and there's not 20 or 30 offers, and whether you're buying a single family house and you're competing, it's like, it's better just to have like, oh, the neighbor's selling it, and hey, they're going to give you like the first shot at it. You're like, oh, really? That's amazing. But we do have a seller right now in Jacksonville, Florida, who's selling a lot of their property, and we've bought a number of properties from them, and they've, we just really have liked working with them. They've liked working with us. And so what we're doing is as they want to sell, then, we just say, hey, what's fair? And we'll buy their property. So we're either the only one, or maybe there's one other, group at the table, but it just makes it much more of a smaller, deal for us to be able to go after rather than having to go, compete with 20 other groups. So, but I do think, there are markets where it's harder to find the deals, and there are markets where it's harder to raise the money. We're in a season where it was actually pretty easy. It was easier to raise a lot of money, and now it's getting a little harder to raise money, but we're finding there are more deals coming available, but we're still kind of in this unique time where people are kind of waiting to see how everything's going to shake out and what the market's going to look like.
Well, it's mind-blowing. You in LA. You got to this deal in Jacksonville, Florida. Did you say you got it through a wholesaler, or did you connect with the owner directly?
Yeah, so I have partners. So the nice thing about, when we look at this in regards to multifamily versus single family. So a lot of times if somebody listening has done single family, you think, oh, I have this house, or I flipped this, or I've got these buy and hold, rental properties or these short-term rentals. You can do a lot of that yourself. When it comes to a property that's over 100 units, very difficult to do everything yourself. I'm trying to think of one person that I know that just does everything themselves. Some people have it where they have employees or have other people that help them. But in general, it's very much of a team sport. So like on my team, I have one of my partners, he has 28 years of experience, 13,000 units. And so my lack of asset management experience is not an issue because he's got tons of experience, right? Yeah. And then my other partner, Ricardo, lives in Florida. So he's on site every 1 to 2 weeks. So he's the one who's really kind of worked with deal flow, really making sure that we find the right deals. We actually hired a full-time asset manager who's working with over 1,200 units that we have in Jacksonville right now. So, it really is a team sport. But yeah, the amazing thing is, I don't have to be, I go out every, 2-3 months and I'll check on things and whatever, but I've got team members that really allow me to be here in California, and I'm able to do what I'm good at and they're able to do what they're good at, and we work together and it works well.
So what I learned is that in the single family space, the seller typically sell on their emotions, right? If you find that pain point, that emotional pain point, you make the buy. But in multifamily, I haven't done any deal myself, so not that I have the experience, but from what I'm gathering, it's a different type of seller, and they more into numbers. Are you finding the same thing? And what do you do?
Yeah, it is. It does work a little different. A lot of people think, oh, real estate is real estate. They ask me, well, how's the real estate market? And I'm like, well, what do you mean, single family? Do you mean multifamily? Do you mean the city,
Yeah.
out of city? What state? What,
Yeah.
industrial? What all there's so many different factors. So real estate is it's not just the asset class of real estate. There's many different types. But it is interesting what you said. A lot of single families, typically how they're valued, people can make obviously emotional decisions, they can overpay, but really single family, if you look at what's the value of this home, just even from an objective standpoint, it's usually measured by comps, meaning the comp property across the street, around the corner, whatever, it's sold for this much per square foot, or you can tell basically how much the house is worth based on what that house was sold for. In multifamily, it's a little different. It's really based on how much income the property is producing. And that's where we find a lot of opportunity is like, for example, in Jacksonville, the current deal that we've been working on, the average rents are $922 a month. But in the 1,200 units that we have in town and even close nearby, we know that the going rate after a light renovation for that property is $1,460 a month, right? So we see that $922 to $1,460, and this is after putting about maybe $6,000 in just a very pretty light rehab, floors, paint, maybe a little work in the kitchen, but pretty minimal stuff. That we can see about a 50 to 60% upside in the rent. So if the value of multifamily is not based on comp properties, it's more based on how much income is coming from it, right? So if we can increase the income in the property, it will dramatically increase the value. And that's what we feel, this is what I feel, puts quite a bit of margin of safety in there just to protect us in case there's a recession, in case things don't, continually grow and get more and more stronger in the real estate market. We know that we have some protection there as far as the valuation.
So walk us through your typical deal. What are you looking for?
Yeah, so I think kind of like I mentioned, we do like the value add component where we're coming in, we're not buying. I mean, our group, we don't really buy brand new apartments. The reason why is because if you buy a brand new apartment, and REITs, this is really how REITs function, or real estate investment trusts. And a lot of people invest in them, and I've invested in them in the past. But the challenge is when you buy a REIT or real estate investment trust, you really own the market. And the worst time to be in a Class A or brand new apartment, which is mostly what these REITs own, is when you're going into a recession. Because like where I live in Pasadena, California, you've got 2-bedroom apartments going for $4,600 a month that are newer, kind of great, locations. Well, if there's a recession, they're not going to be getting $4,600 a month. They might get $3,500 a month or $3,000 a month, and that's going to dramatically hurt the returns, and it's going to really hurt them. Versus for us, when we know we have this upside in the rent, we can come in and do these renovations. It puts quite a bit of safety there. So we're buying stuff typically that was built in the 70s. We know, based on kind of going rates for rents and what things should be. And if we can come into these older mom and pop neglected type of places, make them better, it gives us a much higher return. So instead of shooting for a 7 to 10% return per year, on average, we're looking, kind of the mid-teens, around the 14 to 16% conservatively. And the goal is to about double our invested equity in 5 to 6 years. So that's kind of stuff that we look for. And we've had some home runs that have done substantially better than that. And sometimes we do about what we projected. But I think really we're looking at what is the business plan here, right? Every property you buy, I think, should have some sort of story of what it is you're trying to do to improve it, to make it better. And so that's really what we try to do.
So when you buy over a unit, do you rebrand? Most
of the time we do. We don't always, but sometimes we will. It depends on the reputation of the property. It depends on kind of how the property is done. Sometimes, it's just good to come in and completely rebrand, change the name, do different colors, paint it. And we do a lot of times we'll paint the exterior, we'll do different things, but it kind of depends on the particular reputation of the property. And sometimes it will need to be rebranded. If maybe there was a crime thing that happened on the property, maybe there's something like, just in general, there's kind of a reputation property starts to develop. So I do know I have partners sometimes that say, hey, yeah, every single time you rebrand, you put new colors, you put a new name. Other ones are like, really, if we can get the rents, it really doesn't matter. And so I think it really depends. I think it depends on your team. And I think it depends on really what your goal is. And it depends on what you're trying to achieve or what you're trying to overcome. But I think it's a good question. And we definitely, on the exteriors, we'll come in, we'll typically paint, or we'll do a bunch of landscaping. We'll try to, whether it's a name rebrand or it's just something that, if it's a property that sometimes has new signage and it looks okay, we're like, okay, well, that looks okay, but maybe they neglected other areas or they haven't really done the interior renovations. And so we find a lot of deals that we're getting, they still have a lot of upside because maybe they did a little bit of painting, they put a new sign up, but they didn't really do anything inside, or they did they renovated a few units, but now the curb appeal doesn't really look that great. So just amazing how much work some of these properties continually need. Every 5 to 10 years, they need some sort of renovations and a lot of work that goes into them to help make them nicer.
What year did you start, Bronson?
What year did I start? Well, I started investing in real estate in 2006.
Also very recent, okay?
Yeah.
So the shortest time you've been in a deal, I'm assuming, is when you only collect your acquisition check.
Well, I mean, the deals, the acquisition fee is just kind of the first part of the deal. The shortest deal we've had, this is kind of a cool story. We had a deal we bought in Jacksonville. This is our first Jacksonville deal. We bought it. It was March of 2021, and we planned to hold it for 6 years. And the goal was to double the investor equity. This is 288 units. It was a 70s built, apartment complex. Well, instead of holding it 6 years, we ended up selling it. We bought it for $27 million. We sold it for $37 million only 10 months later. So
Wow.
Again, everything's for sale at the right price. And we're seeing that a lot these days, right? That,
Yep.
If you have this number you want to get to and all of a sudden it's available sooner. So we had almost a 100% IRR for investors in 10 months. Yeah, that was amazing, right? So you can't always, going in, you don't always know what it's going to look like in the future. So you have to have multiple strategies. The biggest thing is, does the deal cash flow? Does the deal make sense? If it doesn't go the way you want, how many contingencies and reserves do you have? So you want to make sure that you're prepared for multiple scenarios. But it's interesting, nobody has a crystal ball to know what it's going to look like in a year. And that's why these deals are here, right? Is that we're allowing for some short-term uncertainty, but knowing that we're way short of housing in these particular areas. And we know there's a lot of upside. And we know if we can effectively work these deals, we're going to do well.
And how many of them are you still involved in today or have ownership in?
Yeah, so I think we've got either 9 or 10. I've got to count either 9 or 10 deals. We've got about 200 million. It's about a little over 2,000 units. And so we just recently closed on a 382 unit deal. It's like a 2-property portfolio in Jacksonville. So that was a pretty big one. But yeah, so it's really fun to see the opportunity. And I just see we have an incredible shortage of housing, particularly, they're not really building starter homes a lot of places and apartments. So people that are starting out, they're building all these luxury homes everywhere. In certain places, like where you live in Houston, but they're not building starter homes. They're not building apartments.
Yeah.
They're not building this stuff new. So there's this huge shortage. So being in the business of affordable housing is a great business to be in.
Well, congratulations to all your success.
Thank you.
That's very impressive in a short amount of 4 years.
Yeah, thank you.
Well, today, can you say that if you decide to stop working today, is it possible?
Yeah, well, I did. I was in medical sales. I was a medical consultant. I was a well-paid consultant for about 10 years, and I'd been doing both for several years, doing the real estate and then doing my other job. And then I quit about a year ago because I was able to cover my living expenses with passive income. So just from deals that I've done. So there's really 2 numbers, right? I was making over $200,000 a year, but I wasn't covering that number. The number that I had to cover was how much do I actually need to live? And I found it was only about $60K. If I covered that, I could live comfortably enough and I could travel just like we were talking, to be able to go on trips and do things I wanted to do.
Right.
But so Robert Kiyosaki calls that your rat race number, right? What do you need to actually cover your living expenses? There's a game right in the background, the cash flow game there, where it's a game about covering your passive income. What do you need to actually cover your expenses with passive income? So I'm there. I could work. I could stop working. The deals they are at work. Benefiting from them. I love being involved in the business. So we're continuing to do more deals. We're doing, multifamily deals. We also have a really unique investment in the ATM machine space, partnered with the 5th largest operator of ATMs, which is a very high cash flow deal. It's got a lot of tax benefits. So that's something that we're doing with a lot of people that see some risk as far as interest rates. This deal has no interest rate risk, and it's for accredited investors. So it's been kind of fun to be involved with that as well.
So earlier you said you guys are aiming for 10 to 12% return?
Typically, total returns in the 14 to 16% range,
14 to 16.
conservatively. Yeah.
Can you explain what that means?
Yeah, so on average, we break it down how much returns per year. Usually about half of the money and returns comes through a cash on cash return, meaning through cash flow. So in general, let's say 100K invested becomes 200K over a 5 to 6 year period. Well, typically that puts you in kind of the 14 to 16% return per year. Half of that return, half of that 14 to 16%, usually is cash flow. So usually, it takes about, these R deals takes about 6 to 12 months before cash flow starts. But then once it starts, there'll be hopefully consistent payments that come out and will grow over time. And then about half of the money that are gains typically is made when the property is sold 5 to 6 years later. Now, a lot of our deals we've been selling kind of between years 2 and 3. Some of them haven't gotten quite to a 2x equity multiple, but some of them, we sell them so soon sometimes that it allows for a reinvestment, or people can put those in other deals as well. But I think having a mix of cash flow, which is great because it allows you to cover expenses, it allows you to, really, cash flow is amazing. And then as you sell a property, you get a lot of appreciation, and then it allows you to be able to reinvest in other deals as well.
You're looking for a monthly cash flow, or is it quarterly cash flow?
Yeah, so there are different types of deals. Our deals, our multifamily deals, are typically quarterly, and it takes a little time before the cash flow starts. The reason why it doesn't start day one is that we're coming into a property. We're usually spending millions of dollars doing renovations on individual units, or on landscaping, or painting, or other sorts of construction projects. And then once the property is really stabilized, we are seeing that upside in rent. We are taking these units that were $900 a month and now they're renting for $1,400. We're seeing that upside. We're seeing the additional cash flow. Now we can start to say, hey, we're starting to accumulate cash. Let's pay out as much cash as we can to investors. The big thing is just managing the cash flow effectively so that you don't run out of cash or have to lower distributions. You want to make sure that you're really taking care of the project. And as you do that, there tends to be more cash over time.
All right, so here comes the heavy lifting part, right? The fighting the deal, and now you got to raise the money.
Yeah.
Because I think this is probably the most intimidating part for somebody who's trying to get into multifamily.
So, and again, people usually choose a course when they start out. They usually are not doing both. People are either finding deals or raising money. There are some people that do both, but it's very rare. Either people are, hey, I'm good at finding deals, I'm good at networking with brokers, I'm good at that part of it, or I'm good at actually bringing money in. And so for me, one of my, in my background, I was really in sales. So I found I love talking with people. And, I wasn't as much of a, hey, I want to sit at a spreadsheet and analyze deals all day long. But there are people that, are engineers, and they love doing that. They love being able to be the person who's getting in the weeds on all the deals, which is great. So, but for me, I love, being able to raise money. And it's not like I just make, random calls or go through a phone book and call people. It's like, I think one effective way that I found to help raise money is just to create content. So whether it's like podcast interviews like this and educate people about how multifamily works and how it can be helpful to reduce taxes and how it can be helpful to, actually have passive income and be able to maybe retire from your job. And just I start talking about these topics, people are drawn to that, and they say, hey, I want to learn about your deals. I want to get on your list. And then some of those people choose to invest with us. But it is kind of an amazing process. I think we've raised about $12 million in the last 12 months. And it's kind of an amazing process when people actually choose to invest with you, right? Maybe they found me on a YouTube video, or they found me on an interview like this. And when people join our club and they actually choose to invest, it feels like a really magical experience, right? Because it's not something that you can plan. It's just like, wow, somebody heard it and it sounded amazing and they decided to join, which is awesome.
So these people that are the investors that are signing up with you or investing with you, are they having to be accredited investors or, anything like that? Any requirement?
We have different types of deals. So we have like our ATM deal. We do have some multifamily deals that are for accredited only, which just is for those that aren't familiar, it's a certain net worth or a certain income requirement. Or we do have some that are for non-accredited or, just regular people that are not high net worth or not high income. Typically, we like to have a relationship with everybody. So we do have an investor club at my website at Bronson Equity. And we schedule a call. We get to know. We try to really kind of ask some questions and just see, who is this person? What is it they're looking for? is there something that could this be a good fit, right? And if not, I'll just refer them to someone else, or I'll say, hey, maybe it's not a good fit. But in general, that I think that's a great way to just really, develop a relationship with investors and see if it is a good fit.
Okay, so for someone who's getting in, what would be an advice that you have for them?
Yeah, I think I have a lot of advice. I have a lot of unsolicited advice. If anyone wants to set up a call, I'd happy to give a lot of unsolicited advice. But I think the biggest thing is, there's this saying, I think it's like an old Chinese saying that's like, the best time to plant a tree was 20 years ago, and the second best time is now. And so it's kind of like, we talk about it, but, we can have all these ideas. And I see it all the time with people. We actually have a coaching program we do, group called Kingdom REI, where we teach people how to raise money and how to go find deals. And the biggest thing, the people that make it, is they just take massive action. They just do something every day. They just learn, they're continually trying different things to just make it work. And so if someone is willing to, try and make mistakes and just make mistakes and learn, as an employee, Robert Kiyosaki, who wrote Rich Dad Poor Dad, he has this book called Before You Quit Your Job. And he basically says, as an employee, you're not allowed to make mistakes. You make too many mistakes at your job, you'll get fired. But as an entrepreneur, which is what, once you start doing real estate, even if you have another job, you're really becoming an entrepreneur. And he says, you have to make a lot of mistakes and you have to quickly learn, because you don't know what's going to be effective, but you have to be willing to make mistakes. And then you just got to learn and you got to reflect and see what works and what didn't work. So I think the biggest thing is just taking action, moving forward. Another great way is going to events, going to local meetups or conferences, national conferences. I know in Texas, you guys have tons of great conferences. I think I went 9 times to Texas last year. And so, there's just a lot of great events out there and you'll meet great people. So if you can, take action, educate yourself, continue to meet other people, you do those things consistently, you can almost inevitably will get to that next step.
Yeah, for the audience that are watching this show, Bronson does have a good YouTube channel about multifamily and raising capital too. So that's something you should go over and watch as well. What is an impactful moment or a turning point in your career?
I think there's been a number of them. I think, for me, there was, again, I mentioned Tony Robbins, but the idea, it's in your moments of decision. He has this quote: in your moments of decision, your destiny is shaped, right? So when you actually choose, you make a decision that this is what your life is going to look like. So when I made a decision that, hey, I'm going to do this, I'm going to fully go after multifamily, no matter how hard it is, I'm going to learn it. And I realized how valuable it would be to learn. So when you actually decide to do that's a very powerful moment. Another one, I had some other partners. I was kind of working with their brand for a while. We kind of worked together on some of their stuff. And then it was about 1.5 years ago when it was just like, okay, it's time for me to go do my own thing and start my own company, Bronson Equity, and really go for this. And that was a big moment as well. So I think there's been moments where things happen, there's opportunities that present themselves. And sometimes we have, we will make the right decision sometimes. Other times we will not make the right decision. But I think in all of it, we just have to be kind to ourselves and just try to learn and keep moving forward. So I could look back at a couple of those just key decision moments where I was like, okay, I'm all in. Let's do this.
I think what you said is be willing to accept that you make mistakes, right? Mm-hmm. Mistakes happen and just get up and do it again.
Well, and sometimes the mistake is like, it's how we learn. There's a good book by Ryan Holiday called The Obstacle is the Way. So when we actually face challenges, that's actually how we get to where we're going. And I think we're taught, we need to, make no mistakes. We need to be perfect. Well, if we want perfection, we're never going to do anything because we'll feel stuck with, I just can't make mistakes. So I think we need to give ourselves permission to make mistakes and just realize that everything is going to be learning. We're going to get information from that. And we can't look at it as a reflection of this is who I am, right? It's just that, no, I'm just learning. I'm just figuring it out. I'm just allowing myself to continue to grow and learn to make mistakes.
Totally agree with you. All right. So what is the one thing that people might be surprised to learn about you?
Oh, one thing. Only one thing? I think I
well, you can share more than one.
Yeah. I'll share two. So I do competitive Spartan racing, which is like an obstacle course racing where you run for 3 to 13 miles and you go over obstacles. And
you're a runner.
Yeah, I'm a runner. And so this is a competitive thing that you do, and you get in the mud and you climb over things. And it's very challenging physically, but it's been very fun. So that's something most people don't know. And then the second thing is, we were talking before, is I love traveling. So I've been to 40 countries this year in 2022. I've traveled 5 times internationally, and I've got at least one more plan to go to Chile, to go to Patagonia, do some hiking there. So I know you're a travel fan as well. So I love traveling. That's another thing.
Yeah, so Bronson looks really young if you're listening to podcasts. I don't know how he traveled 40 countries.
Well, thank you. I can't say I have less hair than I did like 10 years ago because I'm totally bald. But yeah, no, I try to pack it in there. So, and it is truly like a bug. Once you catch the travel bug, it's hard to stop traveling, especially after COVID, since we've been kind of locked down for a while. Yeah.
I'm on one trip, and when I'm on my trip, that's when I make plan for my next trip.
Yeah, I get it. No, it's easy and I think the thing about it, to me, travel is like, it's adventure, it's fun, it's learning, and it's exploring, but it's also like, I don't know, it's very educational. It's also a reward, right? So what I do is sometimes I'll take a long flight and I'll just be like, okay, I'm going to outline this many videos on the plane, or I'm going to do this amount of work. And when I get there, I try to shut everything down and just try to enjoy when I'm there. But it is so fun traveling and being in different areas, and it's very educational and fun.
It is fun. And I think it's also very beneficial for the business, because it does give you like a step away from the business and really look into your business and see like what is falling apart, what's the hole that needs to be filled, right? And give you that refresher of being away so you can come back and be better.
Absolutely. There's nothing like getting away. I mean, it becomes kind of a meditative practice where you're able to spend some time reflecting. And I love it. I mean, I think for me, it's just what you said. If you just grind in your business, you're just out there doing stuff 24/7, 365, you're going to burn out. And so you've got to. So I'm always planning my next trip, and I think you are too. And I notice a lot of really successful people. They tend to travel more than most people, and they also tend to like exercise more than most people, because I think like you can just carry a lot of stress. I don't know if you exercise as well, V, but I love. To me, it's like a huge outlet where I just like, every day try to go work out for an hour. And it's like these habits, like, we make these habits and then they make us over time. And so I just think, there are things that allow us to kind of help balance our lives more.
Yeah, I mean, it doesn't matter how much money we make, right? Our health is the most important thing, and then our mind. Well, mind and our health, they kind of go hand in hand.
That's it. Preach it. I love it.
All right. Well, thank you so much for being on the show.
Oh, it's so fun being here. Thanks so much. Can I share this report I just wrote if people wanted to download it?
Yes, you can. And I'll include it in the show note as well.
Sure. Yeah, this is everybody's asking these days about inflation and how to not get punished by inflation, the pain at the pump, and also with investing. Well, this is a ebook I wrote. It's a 50-page ebook called How to Use Inflation to Your Advantage. And I'll give it out as a free gift to your listeners. So if you go to bronsonequity.com/inflation, you can find it there and you can just download it. But it's been a lot of fun. It gives kind of 3 practical ways that you can really use inflation, to help you rather than hurt you.
Thank you for watching the Real Estate Ballers show. If you found value in this show, hit that like and subscribe button now. Also, leave us a comment below. Also, help us get the words out by sharing this episode with a friend. Thank you so much, and see you next time.